I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is the position disclosure. I ended up selling out of that NEO right into the close. Was in NEO pretty much all day. It was an okay trade. Disappointment in the lack of follow-through. We could talk about it. Kept a little bit of NVIDIA short. Maybe I'm crazy. I'll tell you what's crazy. This market is nuts. This market is completely crazy. Let's look at our daily charts here. SPY's closed up 0.4%, not too big of a deal. Qs are up 1.2%, and IWM is flat. It's really the insanity here coming in the NASDAQ on this move today. And TLT bounced back, so interest rates were lower. I guess market isn't so afraid of the taper that's coming. Look at this NASDAQ. This was the biggest thing that I was highlighting this morning. And honestly, the upside continuation in the NASDAQ is not surprising. Not only is it not surprising, it's exactly what we spoke about in the morning meeting today. Albeit concerning. It is a little bit concerning. I did not, Brandon. So what I discussed in the morning meeting today is the market potentially going parabolic. We were already in an ascending channel here, really in the SPYs also, but especially here for the NASDAQ. We were already in an ascending channel that had a very accelerated slope to it. And we actually, as of yesterday, broke out of that ascending channel to the upside. So the slope, the rate of change here for the NASDAQ is increasing. That's what happens when momentum is in the market. That's what happens when markets go parabolic, right? That's a shape. The definition of momentum really comes into play here. The greater the price, the greater the demand. I mean, we really saw that in some of these stocks like NVIDIA today. It was like the more it went up, the more people wanted to buy it. It was completely crazy. The degree of some of these moves that we've seen in NVIDIA, Tesla, AMD, we can take a look at those in a minute. Markets going parabolic is not healthy. What I want to see as a bull, and I'm pretty much long across the board. I've got that small AMC position on, added to some NVIDIA today, which I could talk about also because that trade was very difficult to try to get short. I know some of you guys caught it to the long side. Anybody who caught it to the long side and caught that whole move, congratulations. But trying to come in on the opposite side of that because it was extended was very difficult. So again, we can talk about that in a second. So anyway, the market here is potentially going parabolic. That is not healthy. We could potentially be looking at a blow-off top type of situation at some point soon if this rate of ascent continues, and especially if it continues to increase. It's just crazy. What I likened it to in the morning meeting today was September 2020, the beginning of September 2020, beginning of the month, right in here. So let me zoom in on this section of the chart so we can take a look at it again. So, a little bit of perspective here. The March 2020 bottom from the coronavirus crisis. Doesn't this just seem like a blip on the radar now? The March 2020 low from the coronavirus crisis we had here, and from that low, we were in this accelerated ascending channel. And then that led to a little bit of bump and go in July, which is typical, right? Sell in May and go away. We saw that this summer as well. And then starting in August, that ascending channel just resumed again. And it resumed with an even greater slope. And then that slope increased over time. You can see here this channel really kind of breaking out to the upside on August 26th. And that's the beginning of this market beginning to go parabolic here to the upside before leading to a significant crash that we caught this crash as a team really well here. I remember we called it out. And the reason how we were able to identify it, we recognized, just as we're recognizing right now, that markets going parabolic it's not healthy. You start to get into like a greater fool type of theory, which But again, momentum is a really strong force, so it can continue. This candle here on August 26th of 2020 feels very much to me like yesterday's candle for the NASDAQ. Now the difference, the way that we were able to capture this high here was because of the VIX. So the VIX back in September 2020, VXX is what I'm looking at right now. You can see that the VIX started rising along with the market, right? So what day was the absolute high in the Qs was September 2nd. You look at the VIX here, the VIX really starts rising on August 27th. And 1, 2, 3, 4, 5 days in a row here, culminating with that September 2nd high here in the VIX, along with the market making a high at the same time. So we did a really good job recognizing, all right, the shape of this market is becoming parabolic. VXX is making new highs every day along with the market. It's usually not how it works. And we were able to kind of call that top. So again, I just want to compare this candle here from August 26, 2020 to yesterday's candle. Let's zoom back to right now. Yesterday's candle broke out of this channel here to the upside. So to me, it's a concern. But the difference is that the VIX has been continuing to drop. And even pre-market this morning, it was gapping down with the market gapping up. So that's normal. So I'm looking at this market breaking higher and seeing that the VIX is continuing to go lower. And I'm starting to look at this market that's extended, even into today's gap, saying, one, of course, we need to be careful buying in an extended market. There's always appropriate degrees of caution that you need to recognize when you're looking at a market that's extended. But at the same time, if we're beginning on a parabolic move, I will take one of those, please. If we're going on a parabolic move, oh, thank you so much, Donna. Appreciate it.
You're gonna need more than one.
I got a little. What are we celebrating? Anything with this, or just you're being awesome? Okay. What? Corey being here. Donna just gave me a little Jello shot, so cheers. Oh, you guys can't see it on here? I think it's on the YouTube there. Anyway, cheers. I'm just gonna down this real quick. If I can down it, I'm gonna need a spoon. Josh is immediately here. All right, sorry about that, guys. Anyway, going back to this analysis here of the market kind of going parabolic. So on the one hand, we need to be cautious whenever we're looking at buying in an extended market. On the other hand, I kind of feel like this is the potential of a day one where we broke out yesterday and we could really get this bigger degree of momentum coming in. Again, even if you go back to the comparison that we just made at the end of August 2020 into the beginning of September 2020, it was still what? 5-6 days after this candle? We still had another like 5-6 days of movement to the upside. So this to me is a little bit worrisome. It's a little bit dangerous as a bull because these types of movements can't last forever. But the flip side of that is I definitely don't, and this is what I said in the meeting, even though I didn't perfectly follow through with this, I definitely don't want to just come in and just start shorting stuff without a signal. Just because it's extended is not a good enough reason. We need other confirming factors to come in. Pat's note this morning where he was talking about some of the indicators he uses also signify that we could see higher price action still as this market becomes more extended, and that's exactly what happened. Coming into today, it's difficult because I'm expecting good price action, I'm expecting good volatility, I'm expecting these wider ranges like we've been having. I also know I need to be a little bit cautious on new longs. I really need to see something coming in to confirm that those new longs are worthwhile for me to take in an extended market. I want to see option flow. I want to see volume. I want to see our confirming factors. And if I don't have them, I got to be careful. And as far as the short side goes, I can't just short because the market's extended. Because a market that's irrational, if you want to even call it irrational, can remain irrational longer than you can remain solvent, right? That's the saying from, I think, from Keynes, the economist. And that's kind of the situation that we're in. So we really want to be picking our spots and you know, we'll see. Like, we might even be looking at several more days of upside here. So that's the Qs. I think they're the most dramatic as far as extension goes. Spies, you know, we're seeing here a little bit, but they didn't have as big a follow through. And the IWM actually gave a little bit of a doji, but that's after a huge day yesterday also. So we'll see what this turns into. I'm still seeing no signal to actually do any shorting. I am, for the most part, just sticking with my long positions, though I do have, at this point, a NVIDIA short position. NVIDIA short is actually my best name of the day, which is kind of crazy, considering what it did. And I'll be the first to tell you, the easy money was to the long side. We had the confirming factors that were telling you to buy, not short. You know, look at the volume today. Look at the option flow. The option flow, the bullish option flow that was coming in non-stop. It's so much easier. Even looking at my P&L, making money to the short side today, it is so much easier to have been long NVIDIA than to be short NVIDIA today. So much easier, and I lost a small amount of money trying to short AMD. So much easier to be long AMD than short AMD. I lost some money trying to short the T-Triple-Q today. I was really close to capturing the high on it, but it's such hard money. It's so much more difficult to trade counter trend and trade counter momentum than to just be with the direction of the movement. And that's a great principle for everybody to remember. Be with the direction of the movement. Don't be a hero. And if you are trying to be a hero, you really need to make sure that you have a signal. I did not really have a signal when I was coming in and trying to short the Qs. I was shorting the Qs here. It was more just, I was trying to hedge myself. You know, it's like 10:15, 10:30 on the day at this point. The market's even extended still in a 5-minute. At this time of the day, it's usually when we see 15-minute corrections. And guess what? I got pushed out right here on this green bar for a nice, nice little loss on this thing. I got out at, I think, 169.60 on my short for a nice little loss. And then, of course, one more little uptick, and then the pullback that I was looking for actually occurred. But the point is, this is such hard money. And I was shorting this just because it was extended. That's not enough. In this market environment, shorting something just because it's extended is not enough. We need to have some sort of actual signal come in and tell you to short. And yeah, you know what? I was keeping an eye on this VXX. VXX, the VIX here was going green and rising as I was trying to, put my Qs on. So I had that extra layer of probability on my side. But I still need to see the specific actual signal come in and tell me to short. And I didn't do that. I'm just like, okay, I'm just going to short because the market's up too much. And guess what? I just, might as well have just opened up my wallet, took out $1,000 and given it to any one of you guys, because it's just a waste of money. I was really trying to be selective with that NVIDIA also. I had a few break-even trades on this thing and then kind of was quickly getting out of the way on it. I first shorted NVIDIA at a little trade at about 10:05 today. Yeah, off of this candle. Again, extremely extended. Even at this price, right? This is a price of 283. I'm looking at this daily chart like, oh my God, look at this degree of acceleration. And that's only when it was at 283. It went to 313. That's why you got to manage your risk. That's why you can't just short things because it's up too much. But what I'm trying to do here is I'm trying to short on the way down. So I got a great price on this short, luckily, and I was able to just barely cover my risk. I think I literally got the low tick on the way down here to cover my risk, and then I got stopped out. And then I went on with my day. And then I typed it up a little bit later when this candle came in. Same thing. I'm shorting it on the way down with the volume confirmation, with the shooting star. I got a little bit of a move here. I was able to cover my risk plus a little bit more, and then I got stopped out. And then I really started to probably watch this a little bit too closely. I then reshorted it back through this $300 here. Every time it got a little bit extended, $300 is a big psychological level. It's a little bit extended. Volume picked up again on that break of $300. Inside 5 and down here, so I shorted it again on the break down through $300. I got a big enough a move here to once again have a slightly profitable trade. So I had a break-even trade, a slightly profitable trade, a slightly profitable trade, and then this candle definitely threw me for a loop. The problem with my short here, and this one I just took a straight loss on it. The problem with my fourth short, I timed my first three really well. I had the proper signals. Even here, you got a little bit of a signal, a little bit of a shooting star candle. I actually liked that it broke highs and came back down. But what I didn't have was the extension anymore. And it's the extension, along with the shape of the candle, along with the volume confirmation, that enabled me to pick my spots well enough to be able to cover my risk every time on the other trades. This one didn't happen. It just goes sideways here, breaks up, I get stopped out. And then I took a couple more trades in here. I think another one was break even. Another one was just another pure loss. So now I got, a few break even trades here, like 4 or 5 break even trades, and like a couple that are just straight losses where I couldn't get any risk covered on it. And this is just such hard trading. Look at this chart. Look at this chart. Look at the spots where I shorted. Even if I shorted this as perfectly as possible in all these spots, it still would have been so much easier to just be long the stock. Just be with the trend. I'm trying to show you guys what I'm seeing to try to strategically execute these shorts. And even with that, I feel like I traded this like as good, almost as humanly possible in some of these situations if you were trying to trade it to the short side. I mean, again, the stock still closed up 12% today, and it's my best name, and it's to the short side. But where I really caught it was on the upside capitulation here. And even this was so difficult because, look, this shooting star happens, and then this next shooting star happens, but this high breaks this high. It was brutal. I did see something in the tape here that showed me that this was the moment. When they broke that previous high, there was a pegging seller, which you almost never see, coming in on the level 2, just pegging this thing all the way down, then immediately came back down below that high, and then that was the signal, and that was it. And this is where it got extremely extended. The volume went nuts. Basically the highest volume of the day coming in on these 3 candles. And then we got the actual real breakdown, and this happened to be my heaviest position in it by far. I whacked, a couple thousand shares or whatever at, I think 311.57 was my price on the way down, and I still am not advocating this honestly as good trading. It's to show you, I guess, one, how difficult it is to be counter trend and counter momentum, how you got to be like a surgeon to really pick those spots, and that even if you do the right things, you're probably going to lose money being counter trend, counter momentum. It is so difficult. Just look at the option flow hitting. Look at the volume. Look at this thing working its way higher, trending beautifully. Look at these pattern continuations here to the upside. Just be long. With that said, of course, you want to be a little bit careful being long a stock that's extremely extended. I think at one point somebody in the VTF was like, hey, who's going to buy NVIDIA here? And I said, not me. And it was probably like 285. It's because I just thought it was just too extended. But I'm already seeing out of the corner of my eye a question from Mark. Can you explain why you wouldn't look for long? Yeah, no, Mark, that's exactly what I'm saying. That's exactly what I'm saying to you guys. That's what you should be looking for. You should be looking for the long. Go with the trend. Go with the momentum. It's so much easier than going counter trend. I was just looking at the degree of extension. RSI was what, 89 on the daily?
It's the highest in NVIDIA history.
The RSI is the highest in the history of NVIDIA in terms of showing you how overbought the stock is. I can tell, based on my extension rules, just looking at it, how absurdly extended it is. And that's what was in my head on trying to find that hero trade. But you're better off just either not trading it at all or again, just really trying to be on the side of the momentum, on the side of the trend. And yeah, Brandon, for sure. It makes sense to me to either not trade it at all because of the degree of extension. It makes sense to me to try to be long, but being cognizant of the degree of extension, but trying to be long because of the volume. And again, the option flow is ridiculous. But that's what we see. That's what we see in Tesla too, right? Whenever Tesla's given these insane moves, like I remember on this day here, on September 25th, it was just like NVIDIA. Pat all day is posting Tesla bullish action, Tesla bullish action, Tesla bullish action. And one other thing though did help to confirm the high was Tesla bearish action. Is this, Pat, is the only bearish action we saw in NVIDIA at highs? Pat's looking back, but I'm pretty sure that the only bearish option flow activity that we saw in NVIDIA all day was at highs. It shows you the power of using the institutional option order flow as an additional layer of probability in your trading. I still don't advocate just blindly buying a stock because you're seeing option flow. But when the option flow is consistent like that, take one. When the option flow is really consistent like that, that is that's a lot of times when these things just completely explode. It gives you that confirmation. And yeah, AMD too. I only tried that AMD short one time. Unfortunately, I didn't get my 1-to-1 kick by like 8 cents or whatever at the lows of the pullback, and then it made new highs, and I stopped myself out. What'd you say?
I posted that at 251.
Did you just repost? Oh, you just reposted it at 251. Literally at highs. Pat just reposted his own post from 2:51 p.m. NVIDIA bearish action. It's a $525,000 opening multi-sweep order, put order there for 305s. So that guy got paid. that guy got paid today, man. But yeah, up until that point, it was just all bullish, just so insane. The degrees, you know, and obviously we can see it in the Nasdaq and in the parabolic nature of the Nasdaq here, but the degrees of the moves here in some of these stocks right now, like your Nvidia, like your Tesla, like your AMD, they're just so sick, and you don't want to fight them. You maybe can very strategically look for shorts when like that capitulation occurs, but for the most part, the money I made in NVIDIA today, I'm just want to recognize to myself, even, it's just such hard money. It's not what you want to be going after. And you know, that's really all I got to talk about. I have a hard cutoff at 5 o'clock today, so I have to be shut down and leaving the office at 5 o'clock today. But I'm not even going to go over, you know, I guess I could go over NEO real briefly because a lot of us were in it. This NEO got a big upgrade today. Deutsche Bank put a price target of, I think, 70 on it, which was huge. I like the pattern going into it. I like the stock. This was a tough trade, though. It built out this bullish pattern, and it was just very heavy into it. And eventually, this ADMA caught up, and it was able to accelerate. So I took like a real nice ad just above $43. I was already in it, but took a bigger ad here. Right before it accelerated because this ADMA was catching up to the base of the flag, and I know that is usually when you get continuation, and I kept that ad stop super tight. I was just giving it to the low of that bar, so I was just coming in and risking whatever 20 cents in it, and then, you know, we're able to capture this move, and then I got that stock. Then I very quickly raised my stop to the low of this bar right here because I viewed this as a higher volume ignition bar on the break of this flag pattern, so I got stopped out of that stock on this candle here. So that's where I got stopped out of the larger portion of my position. The rest I was giving more breathing room to. I didn't even actually have a physical stop loss in at that low. I know Brandon asked me that question, but it didn't close well enough for me, so I liquidated my position into the close. I just figured this market's extended, the stock is giving me a tail here, I don't need to keep it, so I just got out. So yeah, then I traded the VUZI also. I lost a little bit of money in VUZI, looking for momentum to come in and could give continuation. But that's it. That's really all I wanted to chat about. So I'm happy to take a look at any questions. Today was crazy. Scrolling back to about 10 after 4 here. We got a lot of companies here that are reporting earnings after hours. Square is down. Did Oxy have numbers? That looks like it's trading flattish to down. Peloton is destroyed on its numbers, right? Yeah, it's murdered. Absolutely murdered. Confirm, do you look at what percentage above the 50-day moving average market or 21-day moving average as a sign of a market extended? So, Fern, the way that I look at market extension is the space between the 8 and 21 EMA. So I consider the space between the 8 and 21 EMA to be what I call technical equilibrium for the stock or market that I'm looking at. So when your stock is trading at $310 and the ADMA is at 262, you're looking at a stock that's extended by about $50 in a $300 name. The right way to really look at that would be on a percentage basis and not just absolute dollar numbers. But I mean, you can, for me anyway, I've been doing this for a while, I can just eyeball it and I can really tell that those degrees of extension are really large at this point. So I would call the 8 EMA, I call this the upper band of equilibrium, and the 21 EMA, I call this the lower band of equilibrium. And then you can have degrees of extension off of it, right? The market was extended on this day for NVIDIA. It's trading at 250 with the ADMA at 228. It's extended by $23. Even here, even after 2 days of rest, it's less extended, but it's still extended. Stock's at 250, ADMA is at 235. 236. It was extended by $23. Now it is extended by $14. So you can see that markets correct the correct extension through time and price. This was a 2-day time correction here. Not even a huge one. Didn't even give the ADMA time to catch all the way up. It's still even extended at these highs, but it's less extended after this time correction. You can also have price corrections. Stock gets extended to the upside and then pulls back to that equilibrium area, to the space between the 8 and 21 EMA. Or in this case, if from a period of extension after 2 days of rest, you just get this upside continuation, 4 days in a row here. And then coming into today, guess what? Coming into today, NVIDIA's extended, but it gets more extended, gapping up even bigger. You think it's extended at the open today at 272? You're right, it is extended at the open today at 272. It's extended by $12. And then guess what? Next thing you know, it's extended by $50. So the point here is, first of all, that's how I view market extension. That's how I view market equilibrium. And a market that's extended does not have to go down. It can go sideways, or if there is momentum, that what enables a stock to become extended in the first place, and what enables a stock that's already extended to become larger degrees of extension is momentum. And what we had in NVIDIA today to the upside all day was momentum. And even now, with this thing being still super extended at today's close, it's at 297 and the ADMA is at 263. This thing, extended by $35, it doesn't have to go down here. It could. That's why I kept some. I got a good profit cushion. I got a good price up here. It could price correct. If NVIDIA wants to, it could go back to 250 and still be bullish. It's just a technical correction down in equilibrium, but it doesn't have to. It could go sideways here for the next 4 or 5 days, and these moving averages will catch all the way up to it. This will create a bear flag, and it could give upside continuation. So that's why we want to measure degrees of extension. We want to understand that when you are buying an extended stock, you have a lower probability of success and a worse risk reward. It doesn't mean that it can't go up. And we want to understand that just because the stock is extended also doesn't mean that you can just come in and short it, because it can become more extended. Again, if you shorted NVIDIA at 280 today and you're like, it's extended, it has to go down, you got your face ripped off when it went another $33 higher, because the extension got even more extended because of the momentum, because of the volume, because of the option flow. Well, really, volume and option flow are signs that momentum is existing. So that is the answer to your question, Fern. I don't understand your question, Cap Holmes. Price to action if short scalp. Yeah, and then even if you do take the short trade, I'm not sure if this is what your question is exactly, all you can really expect when you get the signal is a pullback to equilibrium on that time frame. That's why the better shorts that I had were when we had extension away from those moving averages, because all I needed was a time correction, even honestly, better yet a price correction like I got here. All I need is a price correction. It can continue the uptrend. All I need is a price correction. I can make a little bit of money off this, depending on how greedy I am. The reason I chose to be more greedy and not like just liquidate my entire position into this move was because I recognized the degree of extension on the daily chart as well. So I'm like, all right, I'm shorting here. I'm getting my risk covered because I feel like it should be pretty easy for me to get my risk covered by just this retracement back down into equilibrium. At this point, when the stock gets back into the moving averages, what is the most likely thing from the perspective of probability that's going to happen? All right, forget you guys can't see, but like if you guys can just erase on your screen everything past 2:35 or everything past 12:30 today. So all you can see is that this shooting star just came in and this red candle just closed like this right into equilibrium. Let me ask you, or you should all ask yourself, what is the most likely thing that's going to occur at this point for this stock? The answer is it's going to go higher and stop me out. That's the highest probability thing. The highest probability thing for the market is always for the trend to continue. You should assume always that your trends will continue until they have proven to you that they've actually failed, right? So, for me, I'm recognizing the degree of extension on the daily chart, and I know that there's a high probability of me getting pushed out, but from a risk-reward perspective, once my risk is more than covered as it was in this trade, I don't care if I get stopped out. Because if I give back this money, I get stopped out, I end up just making a little bit of money on the trade. And if this does then create a lower high and then a lower low and I get a short-term reversal, well, look at this daily chart. I could get a move. What were these prices? I'm short at like 296.50 or something like that, I think, up here. Yeah, sounds like that. Maybe even a little bit of a better price, actually. But still, 297, let's just say, something like that was my price on that trade. What's my reward potential on the daily chart? My reward potential on the daily chart is I get to move back to the ADMA. I get to move to 265, 270, to maybe even 250. That risk reward, I like that risk reward. I'll take it. So even if my probability of success at this point is not great because it is uptrending and the option flow is still coming in, my risk is more than covered. I'm in a win-win situation. So now I can look for the daily chart reward to see if I can make more. And guess what? I get stopped out. So I move on. And I made a little, make a few bucks and move on. That's how it should be. Not, you gotta be. But another reason why it's very dangerous to take these trades to the short side is of how easy it is to start fighting the stock. You don't want to fight stock. It's so easy just to say, oh, I got stopped out, but oh, look, it just came back down. Let me reshort it. And that's not good execution. You got to really be like a surgeon to try to put these shorts on. And again, I'm saying that all with the caveat that you would have been better off being long. So I hope that answers your question. Brandon saying, do you think that the Fed yesterday played into today at all? Absolutely, I do. I think that is leading to the euphoria. I don't know if this is just, hedges coming out of the market or a big sigh of relief that the market is breathing. If you guys remember, I said this over a month ago. I said at the last Fed meeting, I think. I was like, guys, what if instead of this tapering being this big, bad, bearish news that brings the market down, what if the market actually breathes a sigh of relief from it because the market views that tapering is coming as a sign that the economy is improving and we've been wanting to get that to happen anyway? What if the market actually just moves higher on it? And that's exactly what happened. So that's that. Rich wanted to go over RDBX. This is from Bill. For what it's worth, what I did on news plays. If it looks like there's momentum, I'll take shares. Let me type up RDBX. Oh my god. Okay, I missed the news on this. I must have been totally focused on NVIDIA. So I don't know what happened here at 3 o'clock. If Pat's able to fill me in. So for what it's worth, what I did on news plays, if it looks like there will be momentum, I'll take shares, sell half once there is a pop, then be very aggressive with my trailing stop after that first sale. I keep moving up very aggressively until the news pop pulls back and then get stopped out. Sometimes the news plays just run so I can keep trailing, and if it moves enough, I can start to use Derrick's trailing rules. It's a really quick trade, so not for beginners. Yeah, for sure. Thanks, Bill. Thanks for that information. I love that different traders in the group give different perspectives on how they trade and how they're able to make money. And yeah, all for that. One of the cool things about ProDesk VTF, I don't know if this was through ProDesk. Bill, I know you get news on your own from other places as well. You know, we do tend to get the news really quickly here as a team, and sometimes you can jump on that super early. I remember even that Bed Bath & Beyond the other day, like Pat posted that news so early into the VTF while I was doing the meeting, and the thing just obviously exploded. So yeah, you know, a few different ways to skin a cat, as they say, and that's definitely, you know, one of the things you can do on a momentum trade. Get the risk covered and then try aggressively. I like it. Mark's question I answered. Next here from Rich. So on the NVIDIA chart, in theory, how would you have found your way in the long? Sure. I mean, let's just look for trades here. Unfortunately, it's straight up from the beginning. This is not an inside 5. If this was an inside 5, that could be a trade. This right here, this right here is definitely a bull flag, though. So the first real entry I see will be trying to buy this bull flag. You know, you buy the break of the bull flag at like 285 or so. You know, you would have to give it to 282, so you got like $3 in risk. That's the first real trade that I see. I don't like this pivot low as a buy. I don't see a signal for a buy there, unfortunately. You have a next resistance here at 290. You could be buying through the break of that intraday resistance at 290 as a potential trade. I really actually don't see too many. You know, even this pivot low here I think is actually difficult to bite into as well. Like, I think as you guys know, was this an inside bar actually? Yeah, it is. So actually, you could have tried this too. When I'm looking for pivot lows and trading stocks, I like to buy continuation hammers or inside and up. I don't like to just, you know, see a stock that's coming down like here and just hope that it then goes up without an actual pivot. Here, you get the inside and up, so you could try to be long versus this low. But it's pretty wide-ranging inside bar, so I don't love it. But that's a potential execution as well. What about this one? Is this an inside too? Yeah, same thing kind of goes with this one. I don't really like the range on this inside bar, but it is an inside bar as a pivot into equilibrium. So when this inside bar breaks up here, you could be going long again. So that's like a third potential trade to get long. I don't love any of these. I struggle with them. I struggle with them personally because I'm looking at this chart. I'm always looking at multiple time frames. We all need to look at multiple time frames. I'm looking at this 5-minute chart, even at this area, like, okay, I understand it's stringing higher. I understand the option flow is coming in. I understand the volume is there. I understand there's a lot of reasons why this thing can go higher, but I still get in my own head on the degree of extension on the daily chart that makes me think that my reward is very limited. But even that being the case, the risk reward can make sense here. You're looking at a stock that's at all-time highs. It's having the most insane option flow that I've almost ever seen, that has huge volume. You know, you could take those trades. The daily chart's just one layer of probability against those intraday longs, when many other layers of probability are on the side of those intraday longs. Again, the chart pattern, the fact that it's all at all-time highs, the fact that we are in a market environment right now where we're seeing this in multiple names like Tesla, the fact that the degree of the option flow coming in. So you've got multiple layers of probability on the side of your longs here on these small time frames, even if you have that layer of probability of the extension on the upside being against you. So that's the answer to your question there, Rich. Okay. Scrolling through from Christian. Could you talk about what would have been the ideal execution in Nikola? Keep in mind, guys, I only have 10 minutes left. I really got to close out by 5 o'clock today. So I'll just do as many questions as I can until then, unless I get through all of them. Yeah, so I remember looking at this Nikola. It got called out by someone here on the team when the volume came in. I don't remember who here. I think that this trade's very difficult because of the way they filled this gap. We actually brought up Nikola in the meeting today for a buy, like versus yesterday's high, 1292. And I think pre-market, when we reviewed this, it was trading at like 1350, and I was like, you know, I'm not paying up to 1350. I'm not risking 60 cents in this thing. But if I could get a price of like 1320 or something like that and risk 25 cents in it, I'd be more interested from a risk-reward perspective. So there's a real possibility, even though I didn't do it, that I could have came in and bought this thing at 1320 here. I would have gotten stopped out. That'd be the first thing I would tell you. Had I taken that trade, I would have gotten stopped out on this bar. And then I probably would have stopped looking at it. As far as if you want an ideal execution, you could say this inside 5 and up, but I don't love it. To me, this thing's broken at this point. It filled its gap, but it never should have filled its gap if that news was going to be real. My preferred execution actually would be up here on the break of these highs and the volume came in. It is negating this downside opening momentum by breaking these highs. So now that it actually broke these highs, you can get upside follow through, and you've got this juicy volume confirmation. So I think that the ideal buy would have probably been a rebuy, meaning that you take your first loss on this thing, but somehow it's still on your radar, and you're buying it through these highs with the volume confirmation, and you could probably even utilize that bar low as your stop, 13.23. So you're buying like 13.47, you're taking like 25 cents risk here, and then you get your follow through. So I think that that would be the ideal entry if you're, to answer your question on what the ideal entry would be. Next from Sebastian. Today I was looking at Google. Oh, GoGo, not Google. GoGo. Yeah, GoGo actually was on my list today also, but I ended up just not getting focused on it. $17.50 here was the level that I was kind of paying attention to for GoGo. So you got in at 17.81. You're left with 33% of your position around 10 o'clock. Okay, so this broke right away. What price did I say? I like 17.50. You're saying 17.81. It was your price. Okay, fine. It's good execution, especially long versus lows. So you were left with 33% of your position around 10. Okay, that's fine. That's a good amount. Given the degree of the move here, it's a good amount to have. I like your game plan. There was big resistance at 19. Yep, you can see that in the chart. That selling was coming in at 19. It had a false breakout, and because of this PA, I don't know what you mean by PA. I cheated and moved my stop loss. Okay. So basically, you're saying because of this break, you raised your stop to here. That's fine. You cheated. I like that you recognize that you cheated. So you cheated on my third rule. Your first rule, you have a pivot. Fine. Second rule, ADMA caught up to that pivot. Great. Those are the two I always 100% of the time want to follow. Third rule, new high. You didn't get it. You cheated on that one. If ever I cheat on a trailing rule, that's the rule that I cheat on. So awesome stuff that you're aware of all that. It worked out well. Wanted to ask you, what do you think of this decision, and what do you do when you see this type of seller? So again, I love your decision process there. What do I do when I see this type of seller? Usually nothing. I let it play out. And that's what happened in Neo today too. I was very concerned about a seller there. I was very concerned that this thing wouldn't lift. I was very concerned about how heavy it was. And I know someone even messaged me like, oh my God, when the seller came back in again at 43 and drove it down, I just liquidated my position. I missed the move. I'm mad at myself. Keep it simple. You have a game plan, just follow the game plan. So what do I do when I see a seller like I saw in Neo? What do I do when I see a seller like you saw in GoGo? I do nothing. I let the trade play out, especially if my risk is already covered. Because at that point, who cares? You're in a win-win situation. And what scenario, next question from Cody, in what scenario do you look at SMAs versus EMAs? I look at SMAs on large time frames, on daily charts. I particularly look at a 20, 50, and 200 SMA, simple moving averages. The slope of the moving average tells me the essence of trend. I'm tight on time, so I don't want to fully explain that right now. I think it's in my classes somewhere. It might be in a YouTube video. It might be in my training program classes I think you have access to. I could also give a more detailed explanation on how I utilize SMAs in a different afternoon meeting. I'm just pressed on time. Next from Dave, can you talk about how to enter on lower time frames? Sure. So the way that I love to trade is I like to have the big picture tell me what I want to be involved in and where I want to be involved in it. The big picture is, the big picture levels are created by institutional money. It's the institutional money that I care about. It's the big money that I care about. And then what I oftentimes want to do is I then want to execute that information based on a smaller time frame, particularly the stop loss. A lot of times my entry execution is actually like the level itself on the daily chart, like in GoGo, which is still up, like 1750. Why 1750? It's the level on the daily chart. But then my stop loss a lot of times might be intraday. and again, it depends on the specifics of the execution. If you're trading a bull flag, like in the video that I just spoke about, well, if you're trading this bull flag right here, you trade the bull flag, right? You buy the breakout of the bull flag, your stop loss is the low of the bull flag. If I'm buying a daily breakout, I might use a 5-minute or 15-minute ignition bar low, that's what we call it, to kind of be my stop loss. So often what I'm trying to do is I'm looking for daily chart reward for small time frame risk, right? Everyone loves to talk about risk reward ratios. I want 1 to 3, I want 1 to 5, whatever. I don't really think about it too much that way. One, because I'm usually looking for unlimited upside. That's the ultimate risk reward ratio, is when your risk reward, the reward side of it, is infinite. And two, I know that if I can stay focused on this concept of daily chart reward for intraday risk, those risk reward ratios are gonna work out. Pat's the man. I can barely beat him, and I know if I do, then the momentum will come. Yep. Zahor here with a simple question. Where do you see the option flow coming in? I'm looking for a source, systems, name. I see the option flow in the VTF is where I see it. Pat posts it right into the VTF. Now, if you want to ask Pat where he gets it, shoot him an email, because I'm not 100% sure. I think he uses Wall Street Jesus and some other resources as well, but ask him. All right, gang, it looks like I got through all the questions just in the nick of time, because I really got to bounce here today. Again, just a crazy market environment. This market's been nuts. This price action's been nuts, but that means there's a lot of opportunity. And some of you guys are doing a great job capturing that opportunity. I love to see it. So everybody have a great night, and I will see you all tomorrow. Keep up the good work, team.